following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are doing well. We're taking a look at the British pound. Yesterday, we talked specifically about 128.85, playing defense around there. If you want to play a kind of a retracement back up into this 132 general neighborhood, I still think that's going to be the case. Again, that's a contra trade against a trend down. So as we look at this, it's not the most exciting trade in the world. This product's obviously volatile as heck right now, but we're in a downtrend. We keep turning the rents the same way, and we broke down below that 132 area. We've got a 240 unfair low to play defense against. As you can see, that was defended pretty well yesterday. We may drift back up into that area. But again, I think we're trying to find a price on this particular instrument. So these profiles, 240, 128.85 up into 132, that neighborhood, that's a pretty wide 240 profile. I'll admit that. And the, the other news out, and remember, when Goldman Sachs says something, it's like God has decreed it in an opposite way. They're finally getting bearish on the pound here, so you got to watch out for some rallies now. So that being said, and with Goldman Sachs coming out with that statement, I think 132 retracement might be in order here. What do you guys think? That's the situation there. What's really interesting today is the Aussie dollar staying on the currency scene. They got their, this is how much is the Moody's S&P change in credit rating means. They dropped the credit rating on the Aussie dollar, or on the Aussie situation as far as their treasuries go. And the Aussie dollar rallies. So take that for what it's worth. You remember 2008, 2009, Moody's, S&P, you could throw that crap out the window. And I think nobody really cares about it anymore. When you're talking about fiat type situations being the U.S., and the rest of the world, I mean, what is it? How can they even rate the credit? I think we've got to. So now with that type of news in 74.81, you got to look at that as support on the Aussie dollar for this to move higher. I think we've got a caller, John from Philadelphia. Hey, are you there?
John Logan, I am here. Thanks for taking the call.
Yeah, good to hear from you, as always.
Hey, John, I wanted to tell you I'm just amazed at the value of your market profile work, and I wanted to call and ask you specifically about the S&P futures contract.
Okay.
Its trading and why price reacts sometimes so precisely to your TAS market profile work. Let me just give a backgrounder. First, Friday, of course, last week, very strong rally, Tuesday, Wednesday, Thursday into Friday. Monday, when Globex trade was open and cash was closed for holiday, the S&P futures contract made a high at 2105, precisely at the top of your daily profile. Then we sold off, Tuesday into Wednesday, and the global news sounded pretty darn bad, falling pound. And separately, cratering shares of European banks, Italy being the focus, but Deutsche Bank, Credit Suisse, all the others going down too. And the S&P futures, the ESU 6 contract, fell, bottomed right at 10:30. Parenthetically, bottomed right at the time that Larry Pesavento's guest Shane Smolini mentioned to always be on alert for at a time when Fed juice-related buying can come in. So it bottomed right there, but right at the bottom of your daily profile. So with that background, why does your data work the way it does from time to time?
From time to time, it's not every time. I'm just kidding. Well, so what this algorithm really does when it automatically outputs these profiles, and this is within the scanner, it's a great question, and it basically treats all, almost 5,000 instruments in this mousetrap that you're seeing right now, the scanner, on all these indices, and you can drill down into. So the cool thing is, you look at the index, you get a kind of a view on the index. So let's just kind of stay on the S&P index for a second. I can pull up a little chart here. This is exactly like the e-signal chart, not as nice, but it gives you these inflection points, just like I've been showing on e-signal this morning, that 2105 and then that 2064 neighborhood down there. So that is, in my opinion, almost mandatory to have. At the same time, you've got those different time frames you can mouse over and see those inflection points. There's a 2105, there's 2064, but an aggregate, summation, if you will, of what's going on with the internals is also based around that same information. So right now, we're pretty still and balanced on the upside here on the daily, and on the weekly, we're net profile breadth positive. So yesterday morning, and I'm going to answer your question in a second. Yesterday morning, I was a little hesitant that, I said, look, if we come down here to 2064 neighborhood, you almost have to just kind of blindly look at the internals, figure out where the edge is as far as the breadth, and just, use that as a battle point. There really wasn't a lot of edge in between here. So, these profiles or balanced areas, inflection points around these balanced areas, this is an algorithm that automatically outputs based on quite a few things going on, but it's mainly analyzing volume at price. So what we do here is we find out where we think a balanced area should be, all things considered, and these inflection points are like that bell curve analysis that you know what I'll do, John, after the break? I'll kind of show that, and I'll kind of dig a little bit deeper into this. We got about 30 seconds before the break here. But what it does is it really tracks the mode of the profile of the balanced area that we determine is that meaty part of the bell curve. And that is the point of control, or that POC there. Now that POC really on kind of thin profiles doesn't really come to play that much for me. But I'll continue this right after the break, guys.
I'd love to listen. Thanks, John.
Thanks, you're welcome.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I don't know if John's still with us.
I am, John. Thank you.
Okay, great. So just backing up a little bit, this is, and I'm showing this right now. I hope everybody's seeing it. This is just a generic bell curve graph. It's a statistical distribution map, really, is what it is. So normally about approximately 70% of all the data points in a bell curve type analysis lie within one standard deviation away from the mean of that peak of distribution. And that would be considered the peak of distribution right up there. So what we do is basically kind of get into this scene, and I'm going to kind of transgress into this as you see it. And we probably don't go over this enough. I just kind of I try to cover all these things just to get you prepared for the market opening. But normally we look at, volume relative to time. So like when you look at an E-signal chart or whatever chart you're looking at, you can see the volume bars on the bottom and they're related to that time bar. But what I like to see, and the way I looked at the markets now, and I really don't look at them a lot of other ways, I really like to listen to everybody on TFNN, Basil, Steve Rhodes, the whole 9 yards. But I kind of always go back to this because it keeps it simple for me, and I don't have to get involved with so many different, indicators out there. I mean, there's probably 1,000 out there, John, as you know, technical indicators. But this one kind of keeps it simple for me. So I like to see, the familiar metaphor of seeing price on the horizontal axis and then looking at volume on the price on the vertical axis and volume on the horizontal axis. So basically in my company, we turn this into basically a situation where we want to find out where those inflection points are relative to our algorithm, relative to where the kind of boundaries of the meaty part of the bell curve that I showed you earlier, being this right here. We want to find out where these boundaries are relative to our algorithm. So we turn things on its side. There's the vertical price axis. There's the volume. And then we kind of boil it down to that's the meaty part of the bell curve. We label them, red and green. And then this peak of distribution on the bell curve, we actually try to find the high volume node and call that our point of control. It's not necessarily going to be right where the mean peak of distribution is in that bell curve analysis. It's going to be the high volume print of the profile, this being the profile. So, then we kind of take it down into red point of control, which is that high volume node, the mode, if you will, when you're looking at just simple, math equations. And the green is the bottom of the profile. So that's basically in a nutshell. And then going down into a chart, this is just a very simple example of an automated trading system that we have that trades around these profiles. I mean, sometimes it wins, sometimes it loses. And how does it know? How do you know? Or how does this particular automated system know to go long or go short around these profiles? You can't always try to trade the ricochet trade inside the profile all the time. At some point, it's going to break out. So, we try to use some other factors in the automated trading systems to try to get an edge on whether we're supposed to buy that breakout or pass on it. This time it lost. I'm showing right there, it caught a good trade there. It caught a good short there. And it passed on going long against that profile because on an automated trading system, going back to looking at some things Basil does or, Larry or Tom, you try to get some kind of biased opinion around whether we're supposed to be long or short around these profiles. Now, going back to the S&Ps, the reason I was talking about this down here, I was like, we need to really come down to this area, and then we need to look at the internals. And I use as that term that Basil coined, very cool, tie to the marketplace, is what are the internals really doing? And I try to keep these in mind when I'm talking about the internals. I try to take a look at the net profile breadth statistics, and on the longer term, I try to see if there's a mixed bag here, and if we're kind of rolling over, and if those two particular internal calculations are negative, I'm probably passing on this inflection point a lot of the times. Now that would be somehow trying to get an edge on whether to be long or short around the inflection points and whether to pass on some trades. But yesterday, we were net profile breadth positive. The market has just also, fundamentally speaking, it's just ignored this Brexit thing altogether, seemingly. And, it wasn't a bad idea to try to pick that battle. I didn't go very heavy down there because I wasn't exactly super excited about just kind of backing up the truck and getting long in a huge way. But, we did have a massive rally here. And so the bottom line, John, on this one is I try to base my trades. I always talk about this around waiting patiently until the market comes to you around some of these inflection points and using them to play defense, because if we're in here and we're also, in our long-term view on the weekly, I take a look at this and I look at profiles. I look at profiles on the long-term weekly. We got up into this area. We got kind of into the DMZ, as I like to call it, where we have some confluence of weekly unfair highs and daily unfair highs. But, we're just kind of crowding. And I don't know, it doesn't look good for shorts right now. I'll put it that way. I mean, we're breadth positive. We're kind of hovering around recent highs. And I'd be kind of terrified to do any type of long-term back the truck up shorts right now. They're trading opportunities at best on the short side. I think the long-term edge is still on the long side here right now. So,
John, thank you so much for going through those visual aids on the CAS profile concepts. And doing the case study with this ESU6 contract here today. I will tell you that answers my question precisely. I love listening to it. I haven't seen you give that little presentation using your CAS profile concept visuals gosh, John, probably for 3 years. So it's
Oh, wow.
it's a great refresher. So thank you. And I'll just mention one last thing in parting.
Mm-hmm.
As I listened to you speak, I was just chuckling in recalling the story you shared. Yeah, the story you shared within the past couple of months on a trip of yours to China, where you gave a presentation similar to this, I presume, wherein somebody rudely from the audience said, you know, John, thanks very much, but I really don't care. I just want your formulas. Please tell us those.
Yeah, that was a little shocking to me too. But I should have responded a little bit nicer in front of all those people. Hey, John, thanks for calling in.
Thank you, John.
Yep, we'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think we've got another caller. Dave, are you there? David? Hello? Must have dropped off. Okay. We'll try to get back with him. So one of the things also that I like to do relative to those profiles, and God, I hope this euro goes down. God, please. I hate it when I'm in a please state, too, by the way. That never works out. Here we go. Isn't it weird how you take these little
The time.
sometimes? Hello?
John.
Yes, Dave, you're there.
Hey, good morning.
Cool. Hey, good morning to you. How are you?
Hey, man, I'm doing great, brother. How are you today?
Doing good. Doing good. I said I wanted the euro to go down, please, and I know that will probably make it go up. So that was my last thing I was trying to say.
No, I understand completely. Do you mind if I take your show into the weeds like I normally do?
Yeah, man. Let's go way deep into the rabbit hole here.
Yeah, let's go down. Question for you. I was listening to your show this morning. You said something that caught my attention, and I was curious if you would expand on it. You made a statement or words to the effect of a few minutes ago about relative to respect to points of control and how you normally don't pay a lot of credence to a point of control when it is a thin profile. Does a thin profile in John's mind mean when the bandwidth, so to speak, between the distribution up and the distribution down is narrow, like a few points higher or lower versus the point of control? Is that what's meant by a thin?
Yeah, that's a
point of
real good.
control?
That's a great question, and I'll tell you. Let me go back to the PowerPoint for a second. I'm showing this just a snapshot of some. The green line is a winning trade, and the red line is a losing trade getting stopped out. Okay, so the question is what's the story on kind of a thin profile and ignoring POCs, and when what's the threshold of when you really need to pay attention to them? I like to use the POCs on the weekly and sometimes the daily. The weeklies are kind of a bigger, the more you go into longer term time frames, like even monthlies, and I think a lot of the guys on TFNN will probably tell you the same thing.
Sure.
They have more impact. The indicators for the longer term, really kind of what's the long term tide of that particular marketplace for that instrument,
Right.
or that edge for that instrument, whatever. So I like to look at the weeklies as far as the POCs here. I mean, if you look at the euro, I'm just looking at this one because I'm again hoping and praying, which is a terrible thing, as we all know.
What hopes on the trade plan, John?
Yeah. Whenever there's really weird things that you learn to stay away from. Like stepping on a crack, break your mother's back, whatever. I mean, if I do certain things or say certain things, I know, oh my God, I'm in that state. This is not cool. I should probably avoid it. So that's when I start saying hope and please, I'm like, oh God, this is not going to work out.
Can I make a suggestion to you, John?
Sure, anytime.
Kick Hope out of the house and tell her to take Faith with her, and you will be a lot better off when it comes to trading.
Exactly. So here's a POC. Here's our weekly on the euro, and just case in point, I just pulled this up because we're talking about it, and I didn't really pull it up staged. So here's a weekly profile. It's relatively wide. All right, it's 108.86, and I haven't done a math calculation on an average basis to tell you, okay, this is wide and this is not wide. But when you have a pretty wide profile, and you can get these within the scanner, I'm going to go in here to the Forex section. It's nothing that you have to have the indicators on your map for. And I really try to not use the indicators on a chart as much as I can not or can avoid it, and just strictly go by this stuff in the scanner, looking at this as a matrix. That's the wrong instrument. Why did I pull that up? Here we go. Here's the weekly landscape view on the EUR-USD, and there's that POC around 111.43. So what am I personally doing with the euro right now? I've actually got on a whole different mousetrap for it. I've got on personally a short on the euro with I bought some in-the-money calls as a hedge because I don't want to get shaken out of this trade anymore. All right, so but if you're looking at this, trying to orient and play defense on the underlying instrument, you've got a relatively wide profile for a weekly, and that means this POC at 111.43 can be taken as a point of contention to kind of play defense and play offense with. So what does that mean? If you look at the euro and you look at the wide profile, you see this POC has kind of acted as support or targets before, and then we've acted kind of as a breakdown and then to go back and retrace. So I'm looking at the daily on the euro. We're below profiles. We're looking good. The weekly, we kind of rallied back up into this general area around 111.43. And this POC, I got to pay attention to because it's a wide profile. And I'm okay with what's going on here, even though it's disturbing that it's not lower. That's the only thing that's concerning to me right now. But I think we'll probably end up revisiting 109 general neighborhood. We might not. That's what stops are for. But, you know, the POC can be looked at as the top of the mountain. You kind of roll down one side or roll down the other when you have a kind of a big mountain. And that's the way I kind of look at POCs in layman's terms. But, you know, in a relatively thin profile, and let me just, I don't know, let me go to another instrument just to kind of, let's go to the Aussie dollar again. So, in a relatively thin profile environment, so this is a thin profile, you know, all things considered, this one right here, and the POC didn't really have a lot of relevance, maybe a little bit. This is our long-term weekly. So our automated systems, the reason I started with that particular slide is there's a feature in our automated systems that says, you know what, if the profile is wide on an average basis, then we're going to take a look at the POC, and we're also going to say, hey, you know what? We might not want to trade breakouts on this particular profile because chances are the edge is going to be, you know, the instrument's going to stay within the balanced area, and we probably want to weight heavier whether we're going to go short or long inside the profile rather than going long or short outside the profile. So there's a couple of things in play here. POC, wide profile, got to pay attention to it, especially on the longer term time frames.
So the longer term time frames obviously might be the top of the mountain versus a shorter time frame that this might be the top of an anthill.
Correct.
That's,
yes.
Using that analogy again.
Yeah, I like that. Can I use it myself?
Yes.
Okay,
yeah,
thank you.
Feel free to.
Thanks.
Yeah.
I like it actually a lot.
Question for you. One other one, if I may.
Mm-hmm.
The automated. I didn't even know there was such a thing with that. The automated software. You have an automated program that buys and sells based off of picking profiles. Do I understand that correctly?
Yeah, we've got something we haven't rolled out with TFNN. It's just something we use internally for our own purposes. It's automated trading.
So you can hang out and have a talk show.
Oh yeah, that's just, you know, I'm actually on the back of my boat right now. This is the green screen behind me. We're just printing money. Dave, thanks for calling in, man.
Thanks, John.
Okay, bye. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Hope you guys are hearing me. I actually had a break on my call, self-imposed during the break. Okay, so question was on the Japanese yen. And if you guys have been watching this show, and I think who asked that question? RJP. Let's talk about that for a second. Dave, great questions a while ago, man. We can, and please continue to ask the questions about the profiles that we output. This is our own algorithm. It's kind of our own way of doing things. I don't think you're going to see this anywhere else. So you have to ask questions because I'm probably the worst at updating documents or any type of explanatory videos. Like Dave pointed out, we're just, sitting on the back of our boat here on our yacht. This is all a cover. The green screen behind me with this thing that you're seeing right now. There's some waves crashing over there, and I've actually got a rod in the water right on the edge there. I'm just kidding. But we have some automated systems internally running, and we don't lease those out at this moment. We try to put all of our efforts into. I've got a whole separate algo group that works on that type of thing. And the main goal with that is to take, just to kind of open up a little bit, is to take the global instruments that are in the scanner, use the edge, I think, with the relative strength trading type concept that we talk about on a day-to-day basis, use the profiles, use the guiding light, the kind of guidance system, if you will, of the 240s or the lower term time frames to kind of regulate those trades once we get into them on a longer term basis, i.e. the daily inflection points. These are all things we've been working on literally for years. And the what if scenarios. We look at, believe it or not, the RSIs, the percent Ks of the world, the things like that to try to get and gain some kind of edge around some of these inflection points that we look at on the long term, and whether we're supposed to be going long or going short or passing on the trade altogether. So, but the main crux of it is looking at our balanced areas and trying to determine, where to pick the battles. Because, your risk reward scenarios are the most important thing when you look at these automated systems. A lot of these, a guy can, in fact, a very good friend of mine, he has a lot of winners, and the winning percentage might be 60, 65%, but he just gets hammered every once in a while. And, he shows me his stuff, and I'm like, well, you just can't do that. Like a system that's winning 50% of the time is just, that's awesome. If you can set the risk reward scenarios, higher, in that case, higher than 1.3, 1.4 to 1. So you have to kind of look at your own trading, take all your data, put it in a spreadsheet, figure out what your own trading habits are really, and then try to say, you know what, a good automated system does this. You know, these are all things considered the good numbers I need to probably look at. If, you know, again, based on what kind of time frames you're looking at, what the general good numbers are. And then you look at your own numbers and say, I'm in the wheelhouse, or I've got a problem here, and I need to reassess how I'm orienting my stops and my targets and things like that. I mean, you know, it never hurts to really hand do things on paper. It means so much more, because everybody's, you know, when you do these things electronically really quick and punch a button or two and okay, yeah, that's it. But if you, the best trading I ever did was back, or the ones that where I felt the real pulse of the marketplace all the time, was when I actually drew out charts and drew things, you know, spent some time on it. And I kind of, you know, was able to maybe feel like I was in touch with it a little more. So take some of your own data from your clearing firm, download it into some spreadsheets, get the CSV files. If you don't know how to do that, ask somebody, or go online, Google, you can find out anything, and just look at your data. Treat it like a system. Remember, if you start going outside, every once in a while it is okay to go outside a system, in my opinion, when you have the edge, or the probabilities are really lining up and you've got some relativity things going on that might be attractive, you can increase your position relative to what your normally position size is. And by the way, you know, you go into a casino, you keep your position the same all the time, they'll win. It's a fact, because they have the edge. They're going to be right more than you're right. And if you bet the same way every time, they will win. All right? They count on a lot of different things going through your mind. You know, you're going to get depressed or whatever, you know, losing money, double down, blah, blah, blah. They really expect that to happen. So the only way to win is to keep your head cool and to change your bet. All right? So, you know, every once in a while, I'm actually a big fan of, when the odds line up, you know, split the aces and actually go a little heavier. Set the risk reward a little bit higher, and maybe play the defense, you know, a little bit better on those types of trades. But you can make I talk about it all the time. I mean, you can make your whole month sometimes when the stars line up. I mean, just like this British pound trade, you know, right before that happened, I was like, man, what's the downside? Everybody's trying to get long. The polls are this. Buy some lottery tickets on the 140s. I mean, do some, you know, little weird things like that. Massive risk reward on that trade. I was too stupid to do it, but we talked about it. I actually was just too lazy to do it. That was my problem. But, you know, looking at the Japanese yen, to go back to, I'm sorry, going back to the original question from RJP before I went into a dark slant there. I'm looking at the spot currency here, and I'm going to show you something. Let me pull up my phone here, and I've got a Windows phone. I hope David White's proud of me. I know he's a big Windows guy. Let me pull up something, and let me show it to you. And John from Philadelphia is saying not enough time to set up those British pound shorts. That's our excuse. Didn't have enough time. Lazy's not the good word there. Okay, so what I've got here, I trade the Euro futures, all right? So I'm going to show you my phone. And if you'll see on my little thing there off this free Windows app that I wake up every 30 minutes and just kind of in a paranoia state, just check quotes. I've got the euro in the middle of the night. I've got the euro pegged here, and it's showing me what the underlying spot euro is, even though I trade the future, okay? So what I do, to answer your question, RJP, again, I look at the spot currency numbers because I feel like you're getting much more volume to analyze. And I know it's an arbitrageable event, looking at the futures on the futures charts of the euro dollar or the euro USD, whatever future. I hear the music. We're going to be talking about this a little bit more when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Look, we were kind of finishing up about the Japanese yen. RJP was asking about some of the profiles on the futures side. I just I trade the futures, but I look at the major inflection points and I look at the underlying spot currencies to find those. Why? I used to be a fan of just looking at the futures data because it's definitely an arbitrageable situation without question. But I feel like the spot currencies give you so much more to analyze, and that's just the way I look at it. So I'm looking at the JPY USD cross right now, and we're kind of defending that 101 area, 101.33. I'm trying to stay in this thing. I just think we deserve to have a 1,000-pip rally here. And I know that we don't have anything to hang on to down here long term on the current profiles. I'm just basing this very long, and this is another question Dave should have asked, so if Dave's listening, he should ask this question too. The length of the profiles. Okay, so you got the height, you got the length, you got the POCs, and you got the unfair highs and the unfair lows. what makes it stay in force a long time? Whatever that is, I know what it is, but when it stays in force a long time, those inflection points really, really are super powerful moving forward. You have to pay attention to them. 101.33 was a big, big number. You know, that general area, I think they're going to defend. I think they're going to defend it. And I'll hit November soybeans in just a second. I think they're going to defend it. I'm going to look at that as, you know, hey, we've had a big pullback. I know this might be a somewhat safety play, but now I've got a 240 to play around with down here and play some more defense. And I've got some, the smart play would be to wait for it to break above the 240s around 101.91. But I'm kind of looking at this as that Euro trade, short the product, long the calls. This will be long the product, long the puts. I'll state that again: long the product, long the puts. That way, you got a great risk reward. We might go back up to 110, and this is one of those things where you just kind of like go do something else. Let's take a look at November soybeans really quick. We got about 2 minutes, one and a half minutes left. Something becoming near and dear to my heart just because it's so crazy right now. Man, how about that action on the close yesterday? That was just nuts. That was like a 40-point rally on the close, wasn't it? Jeez. All right, so looking at beans, got a big wide profile and got a big number right here. Just same concept we were talking about earlier, 1072.5. All right, so let's kind of see where we're at here. In my opinion, you've kind of broken down below profiles. This is a very volatile instrument. I don't know if you can play this to the tick, but you've got some big resistance at 1095, but you've also got, in my opinion, you've kind of caved in and you've rallied back up into this 1075 area. Is that what it is, 1075? Yeah, it's 1072.5. It's kind of the Wild Wild West right now, but if you put a gun to my head, I think we still take a look at this, playing some defense around 1072.5 on the short side. That would be kind of a place to orient stops. I think we could revisit some lower numbers on beans.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.